I do think, in our previous segments, it made it sound as if I was a harbinger of death. So I don't want you to think that. I still think equities are the best looking house on probably a mediocre street. That's how I would think of it. Particularly with bonds where they are, and particularly with exactly as we're speaking about the Fed actually starting to reduce its support for bond buying, you would expect long-term interest rates to start to rise, which means you get your carry on your bonds, but you're probably going to lose a bit on your face value unless you hold them to term. Equities do, in that environment, I think, remain the best game in town. But we do have to remember that really we're probably looking at mid-single-digit returns over the course on an ongoing basis. I think for the next 12 to 18 months. And you're absolutely right. Dividends have become more and more important. They've always been important to Canadian investors, and I think they're becoming more so. I remind everyone that in the long term, dividends have made up 30 to 40% of the returns from the TSX over time, and 15 to 30% of the returns for the S&P 500. So we forget this in a world where equities are appreciating at 15% a year. The dividends seem like a pittance. And the reason I think dividend investing, and particularly dividend investing in the TSX, looks as attractive as it looks today, is the fact that we have yields on the TSX of 2.5%, which is a running yield. And that's before we see the big banks have their shackles removed as OSFI actually removed some of the limitations coming out of COVID. We have that. We have the big energy companies that have stockpiled a huge amount of cash, particularly during the crisis. So we think there's two of the very large sectors certainly suggest to us the dividends. Not only are the dividend yields attractive today relative to fixed income, but they also look as if the dividends are going to be growing, I would say, materially over the course of the next 12 months.
And when you say dividends are going to grow materially, are you specifically then talking about the financials? It certainly sounds like yes, but also the energy companies?
Yeah, I think the energy companies, and again, we know the pipeline stocks have been very consistent and very clear on their trajectory on actually increasing dividends over time. But we have many of the large Canadian oil companies that really hunkered down. And let's not forget, there was a couple times last year where it looked like oil, as if oil was cheaper than water. So I think a number of them stockpiled cash. Furthermore, with respect to the energy patch, there's a tremendous resistance to invest heavily in whether it be oil sands, whether it be conventional, simply because there's been such a backlash from global investors on the issue of ESG investing and carbon footprinting within portfolios. So I think we've got that unique situation where at $65, $70 oil, many of our companies make a lot of money, and many of them are quite reluctant to actually invest in the core business in the environment in which they face on an ongoing basis.
And I think there's been a call from some large investors over the past number of years to the energy companies to really return that cash flow to investors. Have you talked to many of the CEOs? Do you think that that's actually going to be what happens? I mean, because energy companies, they're cyclical in nature. You don't normally want cyclical companies paying dividends that then they have to retract.
Yeah. So I think we're going to get sort of a 1-2 punch. I think we're certainly going to get some dividend increases, but I think we're also going to see buybacks as we move forward. And these are buybacks, I think, that are well supported by the business models in the sense that if you are building up excess cash, to your point, do you really want to jack your dividend meaningfully, or do you want to use buybacks, which are really a sliding scale? I've often used the analogy that dividends are like marriage and buybacks are like dating. You are able to change your decisions in the latter. So I think we'll certainly see buybacks as well.
Okay, we'll take a quick break. We'll be right back.